Okay, so as you can see, I'm currently on the charts on FX Replay. Now I'm just going to go through my whole process of how I like to trade. So first things first is I want to mark where the daily open is. Now the reason why I want to do this is because I like to actually keep track of how price has moved throughout the sessions. Okay, so now I've skipped to the New York open time. I'd only trade New York, so that's why I've started from here. But the next thing I like to do is use fibs and just mark from the daily open from the highest price point all the way to the lowest price point. So now I can see how price has moved throughout the session. So throughout Asia session, it kind of just ranged, but from the London session it started going bearish. So what I'm thinking might happen is price might come back up here to take out this liquidity and go bearish. So what I will do now is actually go into the higher time frames and just pay attention to how price has been moving. Now on the 4 hour it has been going bullish. Most of the times you want to stay with the higher time frames and just stick to what direction the higher time frames are going, a lot of the times as well. So let's just pay attention to what happens. So I'm going to skip to New York Stock Exchange open time, which is 2:30 for me. So as you can see here, already what I've noticed is this liquidity to the upside which has been taken. So we'll mark that as liquidity taken to the upside. Let's see what happens now. Okay, so it starts to go bearish now. The next thing I like to do is mark where the fair value gaps have formed. So a fair value gap is simply the gap between the first candle and the third candle, and you'd usually mark it from where the wick of the first candle is to the wick of the third candle, which forms this gap in the middle. The way to tell if it's a high quality fair value gap is if the middle candle is an expansive candle. From what we can tell here, it's the biggest candle out of these three candles, so there's actually quite a high probability setup. I like to actually enter from where this wick is on the middle candle. What I've tested is price reacts better to the middle candle wick, so that's where I'm going to mark it from, and do about 50 pip stop loss, because that's usually the stop loss that I like to have, is a 50 pip stop loss, and just simply go for a 2-to-1. We'll place this as a sell limit order, wait for price to tap this entry, and then hold out for a 2-to-1. Okay, so it hits straight away. Now this is literally how I trade, and I'll repeat this process. It's not 100% guaranteed that it will hit, but a lot of the times it does hit. So let's just go to the next day. I'm also going to use my higher time frames to form an analysis. As you can see, there are higher lows being created on the 4 hour time frame. So these lows is higher than the previous. Same with this low here, higher than the previous. On the weekly time frame, we can see that the previous week candle has actually broken market structure to the upside. So that gives me further confirmation to continue going bullish. So let's just wait until the New York Stock Exchange. Also, what I want to wait for is this liquidity to the downside to be taken, because a lot of the times that's usually what happens. So as you can see, price has moved bearish, has taken this liquidity. Okay, so price has displaced heavily to the downside. So I'm just going to enter from this position here, have my stop loss just above here, and simply go for a 2-to-1, and let's see what happens. So as you can see, it stops me out, but that's fine. Let's go to the next day and look for another setup. So once again, I've used the daily open and the fibs to mark the highest and lowest point of the day. Seems that price actually has started to shift to the upside. So this high has been broken. So now that's a market structure shift to the upside. And what I'm predicting is price will continue going bullish. But before that, it might go bearish to take out this liquidity. But let's just see. Okay, so I'm just going to enter this position here. Does look like price will continue bullish. So let's just hold out for a 2-to-1 and see what happens. So as you can see, price went bullish and hit my TP for a nice 2-to-1. So the reason why I entered this trade is because, as you can see, from the New York open time, price displaced heavily to the upside, which is a really good confirmation of price continuing bullish. Okay, so I see another opportunity here to go bullish. Now, the reason why I want to go bullish on this trade is because what we can see here is the market has started to shift bullish. We're currently going bullish on the trend. We've got on the 4 hour as well. You can see also going bullish on the 4 hour, and on the weekly, it's also going bullish. So all my time frames are aligning, and because all my time frames are aligning, I could possibly go for a higher risk to reward, maybe a 3-to-1, but I'm going to just go for a 2.5 and just see what happens. So as you can see, this trade hit, and as I said before, when you have all your confirmations, you can actually go for higher risk rewards. And I wouldn't suggest going for like 1 to 20 or anything crazy like that. I did increase my risk reward because I had all the confirmations that I needed in order to actually do that in the first place. So yeah, let's go to another trade. Okay, so I took a loss on this trade. Now I'm going to show you the reason why this trade lost. So as you can see, on the higher time frames, price is still continuing bullish. Weekly, same thing. Now here I decided to sell because what I thought was happening is we get a large energetic push to the downside. So I thought, okay, maybe it's going to reverse and start going bearish. What you have to keep in mind is that if you're going purely just off the lower time frames, there is a very high chance of you getting stopped out, which is probably the reason why I lost this trade, because I wasn't following the 4-hour and the weekly, compared to this trade where I followed every time frame and I was able to get a 2.5-hour return. So that's why you want to follow all of your time frames. So I'm just going on to the next day. Okay, so I also got stopped out on this trade. Now the reason why I wanted to enter this trade is because what we get here is we get a bearish push to the downside, but as soon as the New York Stock Exchange opens, it starts to go bullish. So I thought, okay, maybe it's going to continue its trend upwards. The strategy isn't 100% hit rate, but from what you can see on the account balance of this demo account, can see it's still positive. Okay, so I won another trade here. So the reason why I went bearish on this trade is because what I noticed on the 4-hour is this candle going bearish, this 4-hour candle here actually broke the higher low of this previous bullish trend. So what that told me is, okay, maybe we are starting to go bearish now, which is what I originally thought would happen during this trade. But the reason why I decided to go bearish on this trade is because when you get a market structure shift like this and it breaks a higher low or lower low, whatever high or low it is of the previous trend, there's a high chance that will continue going that same direction. So that's why I went bearish on this trade and why this trade hit. So now that we've gone through some backtesting, I wanted to show you what this could actually look like in the long term. As you can see, I've backtested many different instruments, but for now we're just going to go into NAS because that's the only thing I trade at the moment. And yeah, as you can see, this is a year's worth of data. What you can see, the win rate has about a 36% win rate, which is actually quite good, especially if you're trading a 3-to-1 or 2-to-1. As you can see here, this is the performance by day and the performance by month. So as you can see, my best day is definitely a Friday, as the daily profits is much higher than the daily losses, and all the other days seem to do well except for Wednesdays and Thursdays. Those seem to be the only 2 days that had a negative return on investment, but other than that, the other days seem to be doing well. Now if we go down to the performance per month, as you can see, January was 5%, February 6%, and so on. There was only 4 months throughout this year where it was in the negatives, but the other months had a really good return on investment, especially November, which was 11.2% return on investment. As you can see, the start balance was 11.7k and it went up to 13.1k within that month. So as you can see here, even though we had a 36% win rate, we still ended up in a 25.8% return on investment. Even though we ended up with a 36% win rate, we still end up profitable. And if I go into my TradeZella, currently doing a 10k account challenge, and as you can see, this is 37% win rate. As you can see, the back testing and my live results seem to have a positive correlation. So this is how you know that this strategy works, and this is the reason why you want to backtest, because had I not backtested this strategy, I wouldn't have known what would have worked. I wouldn't have gotten these results in the first place. That's the reason why you want to backtest. If you guys like this video, make sure to give this video a like, subscribe to the channel, and check out my next video on me passing a 50k account challenge on Top Step.